Hi, this is Benjamin Day with Selly Group Real Estate and Pikes Peak Urban Living presenting the March Stat Pack. Here's your legal disclaimer. All right, in part one of the Stat Pack, we look at the general market data that's impacting the entire MLS, and we have two trends represented with the black arrows. We've got a steep decline in number of active listings and a very moderate increase in sold listings that are happening in the marketplace right now. That moderate increase in sold listing activity is having a significant impact because there's such little inventory sitting out there. We're just over 3,000 active listings right now. And I gave a quote earlier in the week to the Gazette saying that we were a 12-year low in inventory. I was wrong. It's a 13-year low. You've got to go back to 2000 to find fewer listings for sale on the market, and even then you're looking at less than 100 units difference. And the number of sales that we had this past month was higher than that time. This is getting to be quite the squeeze in the market. So if you look at what's happened over the last 26 months, the 2011 marketplace was characterized by correction. 2012 was characterized by traction. 2013 appears to be characterized by appreciation. If we look back on that data in 2011, you can see that the sold listings on one axis, the right side axis, those are the units relating to the sold, are gaining on the relationship. By relationship, we're gaining to the active listings, which are represented on the left side axis. And as you can see that gap narrowing, all of a sudden at the end of 2011, that inventory fell apart. It just dried up. And as it plummeted, the increase in sold listings began to happen. For 10 out of the 12 months in 2012, we were seeing that ratio of sold listings higher than the active listings. And where that cues in is at a market of about 6 months worth of inventory. 6 months is considered a balanced market. And you can see that we were at less than 6 months inventory because the blue lines are passing the squiggly worm of a red line there. For 10 of the 12 months last year. Now you can see as we start 2013, we're more significantly ahead of the curve. Those first two blips on January 2012, those were January and February where we were trailing behind the line. You can see how much significantly higher we are right now in the marketplace. This is pretty incredible when we look at the pending and under contract listings going on in the marketplace right now. We are at 4.6 months of inventory for February 2012, and that is the lowest ratio between supply and demand that we have ever seen for this early in the year. You go back to 2008 and 2009 and there was twice as much inventory to sell through. Simply put, what that means is that on a monthly basis, the 650 some sales that we had last month will take 4.6 months to eat up the entirety of the inventory, which is right now less than 3,100 units that are sitting for sale. That squeezes the market and creates a pressure for prices to climb. This is the relationship between new listing price, sold price, and median sales price. And the little black arrows wanted to show the usual January to February surge in asking price. And what you can see in most of those months is that there usually was a drop off in price or something happening in the sold prices, that the sold prices just weren't as volatile as all of a sudden that spring marketplace is in its terms of its activity. And what that means is that seller enthusiasm in the spring months in February usually has this big bounce, and that's what we see in February 2011, February 2012, this giant leap in expectation where the new listings that come up on the market all of a sudden start showing up around $285,000 to $300,000. And last month we saw that average new listing price, the green line, at $281,000. And while it was an increase, and it's increased the last couple months, it just hasn't gone up as dramatically as it has in previous years. And meanwhile, our sales prices are going up. Here's what it looks like again over the last 14 months, going back to January 2012. And what you can see is that the increase in average asking price as the market prices have debuted on the market has gone up a little bit in that 14-month period of time, but not nearly as much as the average sold price and the median sold price. This is where the numbers start to get pretty incredible. This is our pending index, indicating what we have that has presently contracted on the marketplace. And you can see last year, this is where we were starting to see the real change in the marketplace, where we were starting to get that traction. We had almost 1,500 pending and under contract listings this time last year. And that was a 4-year high. Actually, you'd have to go back to 2007 to find a number similar to that. Well, we're past 2007 and we're in the 05 and 06 territory right now at 1,719 pending sales. That number is 70% higher than it was in February of 2009, and it's still 23% higher than the artificial market of the first-time buyer tax credit. Here's permit activity. Do you see a pattern? Things are going up. Just like last month, we're at almost exactly a 100% increase in the number of single-family permits compared to the same month the year before, and a 100% increase in the permit value from 1 year before. And is this trend local or national? Well, guess what? We're not even doing as well as the national basis. This is the Case-Shiller Index, which is released on the last Tuesday of the month, and this number correlates back to December sales activity. And on both the 10-city and 20-city indices, we're seeing almost a 7% year-over-year gain in repeat sales. Colorado Springs saw 5.8% appreciation for its marketplace, so we're actually lagging behind the rest of the country by 1%. So the question might be asked, is this something that's just a local phenomena? And apparently it isn't, because this is spread out over a multiple number of cities all across the country in all different divisions of the country. It's not the most accurate data. The Case-Shiller Index puts Tampa in this, and Tampa is something around the 60th or 70th largest marketplace in the United States. So it's not just the top 20 cities by size or the top 10 cities by size. It's not like a Nielsen rating for media when they're talking about the size of the metropolitan areas. They're just deemed to be samples. So that's what this report is showing. But what you can see on this is that Colorado Springs, while doing well, isn't even doing as well as some of the other marketplaces. We'll fill you in more about what our local trends are in our next version of the Stat Pack coming out in the next couple days. Thanks for viewing.